Hey traders, welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. Good to see you all. All right, so let's get to it. I've got the economic calendar up to kick off this episode. So I do believe we're probably good for audio and video. Excellent. Hey there, gang. Good to see you all. Thanks as always for joining the crew here. All right, today we have a little power hour from the folks over at Java Press. A little strong, kind of nice. Little rocket fuel-y, but smooth. Can you have smooth rocket fuel? That's what we're rocking here today. All right, so gang, welcome. All right, so economic calendar. We're going to kick things off with the economic calendar here. Now, why the economic calendar? Well, gang, if you haven't done this before, this is Forex Factory. Not that you need to be a Forex trader, but what I want to recommend is that in terms of a global economic calendar, considering central banks and everything else, on Sunday night or Monday morning, whatever is easy, head on over to forexfactory.com. It's free. Click on the calendar link up here. And what I recommend you guys do is take a look at the entire week, not just today. Look at what happened, but look at the entire week. All right. So on Tuesday, I'm already thinking out. So yesterday, right? I'm already thinking about what's coming up on Wednesday. And so I've got crude oil inventories that I'd like to do maybe a quick fade day trade on the volatility of inventories, but even more important than that. So here's my crude oil inventories, by the way, right in here. Okay. API data came out yesterday. So, it's going to be that comparison game between that. And I love playing a 1-minute chart to fade this. That's a whole different thing than what is the most important thing on the morning, gang. And why, again, when we see the way the markets were able to recover yesterday, we've got Powell, gang. We've got Fed Chair Powell. And that means going into any Powell event, I don't want to be a bear. Now, after 2 p.m., all bets are off. We could see a little bit of weakness after that. But going into that Powell event, the session before this, even the morning of, I'm going to be focused on the long side. So let's keep an eye on that. That makes today a caution day, but it also makes it quite bullish. All right. So something to keep in mind. Hey there, Line Watcher. Good morning. All right. So let me get this up here. Good morning. Do I think the excessive speculation in some parts of the market will eventually seep into the broader averages? Oh, they have, my friend. Is the market forming a bubble? So, if I'm gonna here, let me grab let me grab a notepad here. That's a good question. And, if I may kind of dig a little bit below the question, the issue with what's happening right now, there's a fear element, right? I mean, there's a little bit of a fear element in play because let's separate between what we're doing in, say, our investing portfolios versus our trading. As a trader, gang, bubbles are wonderful. As a trader, bubbles are wonderful. The part that we're in right now, there's 5 phases to a bubble, and maybe we'll do this sometime in the future as a bonus video in one of the rooms, but we're in the euphoria stage, and I've seen this many, many times over 3 decades. We're not in the profit-taking stage. So if you're wondering, when do I get a little bit concerned, profit-taking is likely going to accompany the distribution market trend. Distribution is just a wide, choppy range. Euphoria is still this parabolic uptrend or a parabolic, but really the focus is the uptrend. All right. So as a trader, please don't concern yourself with it. We're not economists. Our job isn't to put on a suit and tie and go on television. We're traders, and a double green market is actually a pretty generous market for traders. And as one of my mentors reminded me, don't confuse an uptrend with brains. I'm not taking any, I'm not taking any, there's no confetti falling out of the ceiling here for wins right now in an overall uptrend. I think what happens is people start to confuse an uptrend for doing all the heavy lifting, and then when they're not respecting the parabolic uptrend, when it rolls over, they're continuing to use the same strategies that worked. Gang, this is the phase of the market where, back in the day during the tech bubble, they had monkeys picking symbols out of a hat. They had them throwing darts, I think, at a board to hit a symbol, and everything was rallying. What was it? Dave Portnoy was pulling Scrabble, letters, and that's the environment that we're in. It's actually wonderful for trading. Now, to your question though, yeah, of course it will. I mean, of course it will. But remember, what kind of bubble are we in? We're not in a real estate bubble. We're not in a tech bubble. We're in a Fed bubble. So the most important thing is whose bubble bath is it? Whose bubble is it? All right. And it's the Fed's. It's the Fed's bubble. All right, gang. That's who you need to keep an eye on. So when I come back to macroeconomic pillars like M2 money supply and the budget, the balance sheet, the way in which the assets continue to increase, that's whose bubble it is. Watch them for signs that it's starting to lose that acceleration. Okay. Thank you for the question. And I know it's on a lot of folks' mind. Look, financial media has to talk about something, right? So I say trade it. We're traders. We're nimble, right? We can move in and out of the market. All right. So first symbol of the morning, FSLR. Sure. So First Solar. Vishnu, I like First Solar in terms of the likelihood that it's going to continue to move higher. It's really at the moment compressed. So we're likely looking at a bit of a potential momentum breakout. But I already have a pretty good idea from previous pullbacks how this thing behaves. And it's not in any way surprising that we pressured the wave and that we printed these blue grab candles and that the markets have compressed. So this is very much on par with the other 4 pullbacks that we've seen where the overall direction has definitely been higher, right? Okay. So yeah, one, I would be bullish, and 2, the range for me ideally is going to be between the middle and the middle and the bottom line of the wave. That is going to be that more conservative zone for us to look for long positions. So I do like it to the long side. Tesla, sure, Tesla. All right, TSLA. All right, here we go. A pullback to the 21 exponential, which would also be where the anchored VWAP, volume weighted average price, for the first of the year is sitting. So I've got the VWAP in here. You can see that in terms of the sort of lightly colored blue line that I have here. And I have the 21 EMA. And those two together would make, ideally for me, a zone from which I would place either an alert, place a limit order to buy. I would use the alert because what I'd want to do is look to get long via calls. If we were to pull back a little bit more deeply, I'd think about a put credit spread. You can think about put credit spreads at that level as well. In other words, selling credit on the movement lower. But you really want to see a pretty precipitous move to the downside to maximize what you're going to collect. I mean, to me, using that momentum, using that volatility is the secret to options. You harness that secret, that's where your options trading is really going to start to sing. That being said, overall pullback buy, absolutely. Buys at the highs, no way. I don't hate my money. But this little bit of a pullback, good eye. I like what you're thinking there, Shelly. Yep, absolutely. Okay, moving on. Can I share my thoughts on IPO ETF? Is it a good play? So, editor HKT, so when it comes to IPO ETF, so for those of you that are completely unfamiliar with it, let me walk you through it. So, editor, I look at the IPO not as a hugely influential ETF. Look at the volume. Pretty anemic. Yeah. But what I love about it is the curation of names. You want to talk about all those sort of sexy names of the market that folks are talking about? IPO. So I like it more as a watch list builder ETF, not so much to play the ETF, but more as a way to watch list build. And look at these names. There's a lot of names that have been on my radar recently. And yeah, I mean, there's not what's not to like here. So if you want to scan these for double greens, right? If you want to scan these for those double greens, this is a great place to look at. I would also add fairly uncorrelated to the broader averages. Gang, we're in a bubble. And one of the neatest things to be able to do is realize that the tide is going to lift all boats. So what you can do, sure, play the heavily weighted sectors and stocks within the Dow, NASDAQ, S&P, but also look at some of the uncorrelated, meaning these stocks don't have a lot of weight, if at all, in the broader averages. So there's an interesting, I don't want to call it safety because I don't want to imply that, but there's an interesting disconnect that can serve us, So yeah, I would use it more as a watch list builder. And thank you for the question. We were just looking at this ETF yesterday in the sector secrets. And actually, editor, and everybody, check out the most recent article over at countdowntrader.com about boats and tides. We just published this one yesterday, and it's a quick article and a video. Why read when you can watch? No, I'm kidding. I love to read, but yeah, it's handy. Quick little video there. Boats and tide, and that's what this conversation is really about. The tide, meaning the IPO ETF, and the individual boats, meaning the stocks. So yeah, check out that article on understanding boats and tide. That's the way I look at the influence of stocks and ETFs, really on each other, but more so the sector, the broader average influence on the individual stock. And you can find that at countdowntrader.com. All right. So next up, and thank you for the question. I love some of these more niche ETFs, not necessarily to trade, but to look at individual stocks that could be, I think, interesting opportunities. All right. Lulu. Hey there, Stephen. I can't say Lulu's really got much of my attention. I don't know if the nicely fitting yoga pants are part of the work from home phenomena. I wouldn't bet against it. It's just really hard to bet on it at current levels. Closer to the 200, interesting. Closer to some volume levels, perhaps, maybe. But of all the markets that are moving higher in double green, if I have one that's not, it's difficult for me to get too excited about it. Again, I wouldn't bet against it, but it's not something that's going to be at the top of my radar. All right. Hey there, Jason. Raghee, when in a double green play, how long do I hold when it sinks into the wave? Jason, it has a lot to do with how much I budgeted for the trade and how much I have allowed of that budget to be risked. Now, technically, yes. Technically, ideally, an uptrend stays held within the 34 EMA high to low, right? In that window between the top and bottom line of the wave. So for sure, a red grab candle isn't going to necessarily shake me out of a trade because remember, a broken uptrend is in fact not a downtrend. A broken uptrend is chop that carries with it a bullish bias. So with that being said, it really depends on the budget and how much I'm willing to risk of it if and when it breaches the 34 period EMA on the low. So terrific question. Thank you. Okay. Hey there, Joe. How about love? I heard it's all you need. So this is that couch company, right? I don't know anything about. I don't really have any active trading in Lovesac. In fact, this one is a gorgeous looking stock. I'm going to write this one down. In terms of where I'd like to buy this, and this would be a buy. earnings. We got plenty of, I would buy a pullback into the wave. That's a nice, talk about uncorrelated. It's a nice looking, Joe, nice looking name. So structure, like it, wave, valid, not a lot of volume until you get down towards the lower half of so if you're looking for a little bit of volume support, you're going to find that a little bit better in here. If you're in it, keep this in mind too. As we move higher, which I suspect we would, that's the layer you've got to keep an eye on. So let's talk about this from the perspective of, assuming at some point you are going to get long from a lower low on the way back up from wherever that might be. That's this line right here, this kind of pink line, hot pink line. That's your point of control. That's the most volume we've seen so far for the year. And you've got a volume zone here, not surprisingly. So on the way back up, that's going to be a layer of resistance just in front of the 56 handle to keep an eye on. So great question and neat symbol. Thank you. RESN. A. All right, RESN. Parabolic. I like it for longs, clearly, but the closest that I'll be able to do anything with this would be this anchored VWAP. And so, where do I want to anchor that rolling VWAP? So it's a 10-day rolling VWAP. So the way I anchor it is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to anchor to the 29th. I'm going to keep it anchored to the 29th. So yeah, that's what I'm looking for there. And it's lining up pretty well with the previous Darvis. So you've got a zone aggressive about here. And then you've got a nice layer of volume and the point of control. Once again, volume, point of control. That's a nice layer right there. Inexpensive name. I wouldn't short it with the structure, but nice looking stock. RESN, cool. But that's what I would do. Focus on those volume levels and a slight pullback, even something as aggressive as the VWAP. All right. All right. Next up is how do I trade this coming Friday and Tuesday? Oh, in terms of the holiday. So back to the calendar. So we're talking about the 15th. So what do I do with the 15th? Well, the market knows it's going into a 3-day holiday. I don't know that it's really going to emphasize the market wanting to take profits into the weekend any more or less than they might otherwise. It really doesn't play that big a role in my trading because I just won't be trading on Monday. I'll still be treating the weekend as the weekend, meaning in terms of traders wanting to take profit into the weekend, potentially, etc. And so not much, to be quite frank. I mean, Tuesday is the Monday. Tuesday is the opening trading day. Chinese bank holiday, both on Monday and Tuesday. That could be sort of interesting, but nothing really different. I'll still be bullish. I'll still be waiting for market structure. Not that much. 3-day holidays are just, I don't know why they don't put the Super Bowl on a 3-day holiday. But anyway, no, it's not going to do much. It's not going to change much. No. What tickers do we look at to monitor the Fed bubble? Richard, it's not so much tickers as it is the M2 money supply and it is the asset purchases. That's really because one feeds the other clearly. So that's what I would keep an eye on, the trajectory of those two in particular. So thanks for the question. All right, next up is metals. So Janik, from the bottom of the range on gold, did mention in both the futures room and the sector secrets, because we were covering the metals. Yeah, down in this area, previous lows, previous Darvis. I mean, that's where you want to take a shot with either micro gold futures or GLD options. Silver was a little bit more about the rocketing higher, coming back down. And then I talked about waiting for an inside day or a minor low to buy silver. But I'll tell you, neither has structure. And I sometimes feel it sound like a skipping record. I know, and thank you guys for humoring that repetition. But the metal that I have talked about the most has been copper. Copper tracks with this economic optimism bubble, if you want to call it that. And so, yeah, for sure, what I would say is copper's on my radar more. Copper, Freeport, McMoran. Yeah, so as much as folks are talking about gold and silver, silver will track some with copper. There are some manufacturing application of silver. Copper's more of that economic expansion metal. I consider crude and copper really your two canaries in a coal mine to economic opinion. And so, yeah, as much as folks want to talk about gold and silver, keep an eye on copper. And I don't want to short gold and silver. We've talked about the patterns. I'm just right now where gold and silver are at. There's nothing I really can do with it. Okay. So yeah, I don't have a problem holding silver. I would say that you're probably not going to want to hold it much past 25.70 before you take a profit on SLV. But whenever you're trading a commodity futures ETF or a commodity ETF, always look at the underlying futures for guidance as to what the levels that are important are. So I'm not really looking at SLV to manage silver. I'm looking at the SI contract in futures. And then when SI is hitting key levels, SLV is just a way in which that I execute the trading idea. All right. Okay, gang, it is 9:21. I'm gonna let you guys go on over to your respective rooms, whether that be the options room, the futures room, or one of our many masteries. I welcome you guys to check out what we do here at Simple Futures. If you're not a member, take a trial, hang out with us for a little while, see what we do. And as always, thank you so much for joining our Charts and Coffee crew. Check out the Understanding Boats and Tides update over at countdowntrader.com. And if you want that delivered right into your inbox, for example, that went out yesterday afternoon, just sign up. We'll just send you the emails when we have new content, which is 2 or 3 times a week. All right. Okay, gang, have a great one. Remember, 2 p.m. Kapow. We don't want to fade Kapow before the event. Let's look for some strength on the open, and I'll see you tomorrow. Same time, same station. All right, gang, be good to each other.